All right, folks, I think we'll go ahead and get started today. Thank you for joining us today for the third presentation in my ECAP Insight series. This one is Designing Transaction Matching Match Sets. The Insight series is intended to provide tips and tricks around account reconciliations and transaction matching, information that should be helpful to clients and prospective clients. The topics that we deliver in these Insight series are intended to be delivered in 30 minutes or less, so that you can get on with what we know is your very busy day. So for those of you that don't know me, my name is Heather Brown, and I'm a senior director here at eCapital Advisors. I'm responsible for our account reconciliation and transaction matching service line, which is the area that I focus on exclusively. It's the only thing that I do. I've spent now, I think it's 23 years focused on account reconciliations. I was one of the founding employees at Blackline that invented their first generation product before I left to found a small software company that Trintech acquired that became the basis of the Cadency solution. And from there, I spent almost 7 years at Oracle in product management, building out all of Oracle's reconciliation solutions. From there, I made my way over to OneStream, where I became a self-described platform evangelist. My favorite saying these days is, if you can think it, you can build it. And I absolutely love the platform because of the power that it provides clients to do basically whatever they need to do. And then from there, when I left OneStream, I made my way over to eCapital to the delivery side. I established a practice here that's focused exclusively on reconciliations and matching, and using the OneStream platform to develop a series of accelerators that help clients get the most out of their OneStream investment. So my goal for today is to share some design considerations to help optimize both the auto matching and manual matching processes within transaction matching. We want to start by defining what a match set is. Some of you might know, but some of you might not. So match sets are workflow profiles that provide the container for transactions that need to be matched together. Match sets contain some important, let's call it artifacts. They house the data sets, which are used to store transactions, match rules that are used during auto matching. They provide the screens used by users to do manual matching. Sometimes it's referred to as interactive matching. And they also contain the reports that are needed to understand how the matching performed. Data sets, that first artifact that I talked about, determine the structure of the data that will be matched. And specifically, it contains a link to the workflow profile import steps that are used to import the transactions, and the fields that get displayed on the page to the user during manual matching. Match sets can contain 2 or 3 data sets, with 2 being by far the most common configuration. It's going to cover all of your common use cases, like bank reconciliations, where we're matching transactions from the general ledger or the cash subledger to transactions that are reported by the bank. It's also used for your typical subledger reconciliations, where we're matching usually general ledger summary transactions to detail from a subledger, like a loan accounting system, for example. High volume accrual and suspense accounts also follow this pattern. In this case, we'll start with the single general ledger transactions file or connector feed, but we're going to split that data into 2 data sets, one that stores the debits and one that stores the credits. We do that because it makes it easier to match the transactions, and you have access to more powerful matching rules if you design it that way. Intercompany also typically follows that pattern. In this case, we're splitting the payable and the receivable transactions across those 2 data sets. The match set image on the slide that you see here is one that I actually developed to match credit card processor transactions to bank transactions. So in this case, we're matching the credit card settlements, the fees, adjustments, and chargebacks that were reported by the processor to those that were reported by the bank. Now, transactions have to be able to be mapped to a common data structure in order to reside within the same data set. So what I mean by that is, we might receive several different credit card files. If you happen to work with credit cards, you'll know that Visa, MasterCard, and Discover are typically sent in one file, and American Express is often in its own file. We might also receive different files by currency. We might get credit card transactions in US dollars in one file and a separate file for our Canadian transactions. So even though the files themselves are very likely to have completely different structures, very different columns, and certainly different row configurations, that doesn't mean that we have to match those files in different match sets. All of those credit card files can be stacked within a single data set, so long as you normalize the structure. And what I mean by that is you have to map each file column correctly in the data source definition so that they share the same definition in the data set definition. Data source, data set, it gets a little confusing here. So let me just give you an example. Your Visa file could contain merchant ID in column 8, whereas your Amex file might contain it in column 6. That's completely fine. When you build your data source definitions, just make sure that you map those two columns to the same attribute that you've selected to house your merchant ID. So in this way, you end up with what we call a uniform structure that allows disparate files to be displayed together in a single table that has a defined set of columns. Match rules, which is the second part of our match set design, are used during auto matching to try to match transactions together automatically. OneStream supports many different rule types, including one-to-one, one-to-many, many-to-one, many-to-many, and even single-sided match rules. The goal, of course, is to optimize your auto matching in order to minimize any manual effort involved in the reconciliation process. Any transaction that's not matched by the auto match rule has to be matched manually by a user, a transaction matching user in the transactions page. So the image on the slide that you see here is the transactions page. This is the page that users are going to interact with most frequently in their day-to-day job responsibilities. And it's essential that this page function really well in order for the users to be happy with the solution. Manual matching requires searching through lists of unmatched transactions to try to find the related transactions or to identify transactions that are missing altogether so that action can be taken to figure out what happened to those transactions. It could be that files were incomplete, or it could be that transactions were never posted at all. This research and resolution process can take time. It can often leave transactions outstanding, in some cases for several months. So one of the critical design decisions is around construction of the match sets, and specifically how many match sets should be used for a given transaction matching use case. So let's continue with our previous example where we were talking about a credit card reconciliation, and just imagine a case where our credit card settlements receive settlements from various different merchant accounts. Each merchant account is probably associated or could be associated with different entities. Do we need separate match sets for these different merchant accounts? Not necessarily. You might want to have separate match sets for reasons that we're going to discuss in a couple of minutes, but you don't have to. With every match set that you create, you have overhead involved. OneStream provides some great tools to copy from one match set to another. And when you copy your match sets, it creates an exact replica of that, including the data set definition and all of your match rules, which are the parts of a match set definition process that takes the most time. So while you can do that copying and create the initial match sets, the issue is that over time, match rules in particular are likely going to need to evolve because your data might change, patterns might change. And if you split transactions that could share the same sets of match rules into different match sets, you're going to have a higher maintenance burden to live with. Every time you have to adjust a match rule, then you're going to have to go into all those different match sets to do the updates. So While reconciliations are typically performed at the entity account level, match sets do not necessarily need to be created at such a low level. You can have many entity account combinations in the same match set. OneStream uses the reconciliation dimensions to map transactions from a transaction matching match set over to the RCM reconciliation that they belong to. So one thing to be aware of when you're importing your transaction matching data, just make sure that you're being very careful to include any dimensions that are used by the RCM reconciliation. We call those the tracking dimensions. Make sure that those dimension values exist on the transaction matching transactions, and ensure specifically that both your source and target dimension members match exactly the values that exist within RCM, because that's how OneStream creates the relationship between TXM and RCM. It uses the source and target dimensions in TXM and looks for the reconciliation that has those same source and target dimensions in RCM. You don't actually have to display those dimensions in transaction matching. And specifically, that means you don't have to include them in your data set definitions. They just need to be included in your data source definitions so that the data resides in the underlying tables. If the transactions are not configured with the proper source and target dimension members, your transaction matching transactions will not map correctly to RCM using the standard integration. So to help you establish a decision framework for how to define your match sets, I created today's presentation specifically to share with you the reasons that I consider when I'm deciding whether to build one match set for a given use case or whether I want to split those transactions into several different match sets. So let's start with the reasons why you might want to keep transactions in one match set. And the first one is minimizing the maintenance, the reason I talked about before. So as I said, when you create your match sets the first time, you can copy from one match set to another, which is going to copy all aspects of that match set, including the data set definition and the match rules, which again are the two areas that take the most time when you're building match sets. But as I alluded to, the issue is not the initial configuration, rather it's the ongoing maintenance. If these match sets contain the same match rules, you're going to have to edit those rules in all of the different match sets that they reside in, and that could put a lot of burden on your administrative team. The second reason why you might want to keep transactions in one match set is to reduce navigation clicks. And what I mean by this is, every time the user needs to perform interactive matching, they have to open that match set, and they do that by changing their point of view settings. I included a screenshot of that on the slide that you're looking at. They have to go up to their POV, browse to that match set, and open that workflow profile to open that match set. Having a lot of match sets means that the users are going to be spending more time navigating from match set to match set. So now let's talk about the reasons why you might want to create multiple match sets for a given transaction matching use case. And the first reason is performance. You want to avoid having too many transactions in a single match set because it will cause the page to function more slowly. So really what we're worried about here is the transactions page. That's the page that I mentioned earlier that users are going to be spending all of their time on, hunting and searching and sifting through all of these outstanding transactions, trying to find the ones that match. There isn't a hard, and fast limit that I've heard anyone ever publish. But in practice, what I've kind of figured out is I wouldn't want to create a single match set that has more than about 2 million transactions a month. When you get above that, it starts to be a little bit slow, and it's probably better to think about splitting that into multiple match sets. The second reason would be to simply improve the efficiency of the manual matching process. And that would be because if we're breaking transactions into logical subsets, there's far fewer transactions that the user has to look through. So that kind of pre-sorting or pre-filtering of the transactions can actually make it easier for the reconciler to do their job in interactive matching. The third reason is probably the most important one to me, and this is just one of those kind of lessons learned over the last couple of years that I figured out, and it's error prevention. Preventing users from creating manual matches that cross GL strings. And what I mean by that is matching two transactions together that have different entities or have different accounts. Remember, the ultimate goal, the whole reason that we do matching in most cases is to facilitate the month-end reconciliation. So when users create matches of transactions that cross GL strings, it's going to create an out of balance situation within RCM. You'll have offsetting differences, but differences nonetheless in a given entity account combination. So currently, it's not possible to prevent users from creating these mismatched matches, but we can and usually do provide clients dashboards to help detect when this has occurred so that before you close the month, you can force an unmatch of all of those bad matches and have the users go back and correct them. We have logged this as a feature request with OneStream, hoping that we do get some preventive controls to prevent it in the first place. But until the feature gets released, our only option is to detect it when it has happened. And, I wish that, training, would always provide the control that we hope it would. But I can just tell you in practice, no matter how many times I've told clients or employees of clients, don't do this. When they're involved in their day-to-day activities, it's stuff that happens. So if error prevention is a concern, then creating separate match sets by GL account might be a good design for your company. I'm working right now on a series of bank reconciliations for a client that's migrating off of the Trintech T-Rex product. And for that reason, this is exactly how we defined their match sets. We have a whole bunch of bank reconciliations across Wells Fargo, Bank of America, a bunch of other banks. Normally, we create one match set by bank, but these particular bank accounts share activity from multiple GL accounts. And so we went ahead and split the match sets. We created a separate match set by GL account. So I got Wells Fargo GL account A, Wells Fargo GL account B. And the primary reason we did that is error prevention. The second reason is efficiency. They got different match rules, and so it kind of made it easier to build the match rules, which I guess is the last point that I wanted to talk about, match rule variability. If the transactions themselves require different match rules, sometimes it's helpful to have those transactions in different match sets. While it's absolutely possible to define your match rules with filters on them to limit the transactions that are considered by the rule, sometimes it's just easier to take a logical subset of transactions and route them to different match sets that have different match rules that contain the correct rules. So where does this leave us? There isn't a hard and fast rule that provides a clear answer. Defining match sets and deciding how to break them up is really more art than science. If you're unsure, start with one match set and run some trials with users to see how they do. If they're struggling with any of the issues we've described on the previous slide, slow performance, having to sift through a lot of unrelated transactions, or potential risk in creating mismatched matches, you can always split the match sets at that point and then go forward from there. So that concludes my topic for today. If you found it helpful, I wanted to share with you what the upcoming insight sessions are going to be. The next session is going to be on August 20th, where we'll explain how to use transformation lookup tables to normalize and enrich data so that it's optimized for matching and enables us to get the highest match rates possible. On October 15th, I'll be talking about solutions that we at eCapital use to track potential data quality errors and warnings, which makes it so that we make sure that we don't have invalid or incomplete or just bad data getting into the matching work stream. And on December 17th, I'm super excited about this one. I'll be talking about how clients are leveraging the matching process to generate journal entries for post back into their accounting systems. We wanted to go ahead and open the floor for questions. If anyone has any questions on the material that I've presented today. And otherwise, I've got a slide up here that shows how you can get in contact with us. You can scan that QR code if you want to see any of the previous presentations that I've delivered, or always feel free to give us a call or an email if you wanted, to reach out directly.